Hi, everybody, and welcome to this financial broadcast at the Friday we used to see each other we discuss about the some topics which is very interesting on financial market, or also one every time I just like give you some courses on macroeconomics for everyone who'd like interested in trading, of course. My name is François Ablé. Now you know me. I have the pseudo, which is the Frank Belfort, and you can find me through Twitter or also TradingView, where I posted some like articles, analysis, and point of view of market daily or weekly. And also I have a financial broadcast also on each Monday where we discuss for technical analysis and fundamental tool news, which is like help you or help the most of retail traders to take a better position in financial market, right? So if you're the first time to discover me, I'm the main trainer and founder of GSTA Global Street Trader Academy, which is an online academy where we teach people how to trade stock, bond, indices, option, and others derivative products. So you can subscribe me to my Facebook page or your YouTube channel. It helped me to continue to give you some a great content and to support me for the work and the research as I give you through now 9 months, right? Okay, so today I would like to discuss about two subjects which is very crucial for your for your approach if you want to do fundamental analysis. I know that many people they not are very interest in fundamental analysis because they consider that it's very tricky and very tough if you don't have a background of economic background or financial background. It could be sometimes a brainstorming, right? Well, it's because you need to, and I'm not the guy who will tell you that a fundamental analysis is better than technical analysis. That's absolutely false, right? Fundamental analysis is good as well. Technical analysis is good too, right? But the important things that you need to know before starting to do trading, if you want to trade as you want to be as like me, a macro traders, or you want to also be a technical traders. If you want to be a technical traders, you don't need to worry about fundamental analysis, because if you technical analysis, you can focus just on your long-term candlestick. I already told you about that, because in each candle we have so many impacts or effects of the market, which is already included and is dissipate very quickly on the long term, because in long term in the economy is still unchanged and still remain unchanged, right, in the real economy, because all the news are already putting in the inch candles, and also we can see through statistically how the markets react about that. But if you want to be a macroeconomy traders, or macro trader as we call, you need, if you want to focus on each details on fundamental, we can give you some a clue to take a position, a better position on the financial market. You need absolutely to do a difference between the effects or the bias, right? You have probably seen me some through some contents that I present some Monday, and when I do the fundamental recap, I give some I said effect on the financial markets, or bias on bearish bias or bearish effect. I sometimes I said that on fundamental recap if you follow me on the YouTube channel, and I think some people didn't know really what does mean correctly. As you see on the screen, economic news is the effect, right? Because you need to do like to differentiate like the difference between economic and bias. For example, today we got some like the Fed, like the Reserve Federal, United States. They communicating and doing speech about the monetary policy, and they react the willingness for continuing to hike a possibly the like rate interest over the next few weeks, right? So that kind of like this kind of speech or this kind of news is provoke a bias, a bullish bias on the financial market, because there's no like communicating some a figures or a number, magic number. They just said about the willingness to continue for the policy, right? So those kind of information, and others also macroeconomic data, which is very strong to support the economy, as the GDP or inflation, like the set of this package of economic data, it's provoke the bias. This is what we call bias, right? Because the bias is a set of economic data or figures or speech or all of that, which is guide and forge the moral on investor, right? And this is why which provoke the fact that accordingly the all the set of economic or macroeconomic data or speech or all of that, it's provoked for the financial markets actors to buy or sell a product, right? And of course we can detect that graphically on a long-term chart, but I won't show you right now. I teach for my students how to detect that each week, and they know where the market. If you follow me through my analysis, sometimes I said weekly supply or weekly demand, right? The weekly supply and the weekly demand, it's getting for accordingly the bias, right? And this is the level which is guide the investors or long-term investors too, because traders and investors need to worry about the bias, because bias is sentiment, is the moral or sentiment of the financial market actors. And when the market player feel worried about the economy, they will sell the market, right? And this is why traders need to worry about. And if the if traders or like big traders, institutional or financial markets player worry, like they are very confident in the economy based on the macroeconomic data, based on the speech of the Fed or all of that, like the environment of macroeconomic news, they will for sure buy the market, and it could translate it to buy euphoria on financial markets. So that's why it's very important to make a difference between economic news, which is effect instantly. For example, if the Fed increase the rate interest at 1.75, this is economic news because we have a figures on that, and it will be translated directly in intraday trading on the each candles, like for H4 time frame or H1, or probably if the effect is very strongly unexpected, it will be like on transcendent daily. But if we see like a couple of news of the market, and we saw that it's very like bad news, bad figures, speech which is not very really understand, and we probably seen the level of risk of the market, you might probably see that the investors or institutional traders will probably sell the market drastically, and the market will drastically go down, right? So that's why investors and day traders need to worry about the bias. Bias is more important to know, because it's forged and guides the moral or the sentiment on everybody on financial market. But economic news, you don't need to worry about the you don't need to worry about the economic news. There's some like economic news which is probably conduct the bias, like very important economic news as inflation, right? Inflation is very important. GDP, right? Or trade balance, right? Or like rate interest. Those kind of macroeconomic data for news, when they are releases, it's guide the sentiment and or moral of investor, right? But others economic data is just conceived to trade. That if you're trading news or economic data, is just conceived for like very short-term period as a time frame H1 or M15 to make if you wanted money or not, right? And the things that you need to worry about is the bias. And the bias, you have like two ways to detect that. Again, you can also doing some research, like reading lots of news, reading about all the potential communication about the economic on accordingly the product that you're reading for. Or you can also detect bi-weekly where it is a big level where people are supposed to caring about that. Okay, so that's why if you want to do fundamental analysis, it's very important to care about the bias, which is very important because the bias is including the sentiment and all the moral of the economy, right? So this is all I would like to say to you. So the secret for beginning a great fundamental analysis is based on the difference between, again, economic news, which is the effect, or the set of economic news, which is the bias or the moral investor. If you know how to do the difference, for sure, you'll probably be a great macroeconomic day trader. And it could be also a microeconomic news, which is guide some like sometimes for in enterprise. If you day trading stock or shares, you need to know like the activity inside the company, right? But if you're doing forex trading or bond trading or commodity, you need to go in further as the macroeconomic data, right? So this is all what I would like to say to you. I thank you so much for watching this video. If you have the question, please leave me below in a comment, or send me a message or a text through the GSTA message, or like the email, which is contact@gstacademie.com. If you're in Canada, you can call me right back on the 514-943-4416, right? And to like this post, it's supporting the channel also, and subscribing. So please feel free to do that. And you can share also to your friend or your family if you're interested for do trading, or you can call me and come to me if you're really interested in trading. Thank you so much for watching this video. Have a good weekend, and we see you around for the next video. Bye bye.